Welcome to the Cash Flow Champs podcast, the show where we demystify real estate investing so you have the tools you need to gain financial freedom through passive investments in real estate. And now your host, Cash Flow Champs Managing Partner, Prashant Kumar.
All right, guys, this is Prashant Kumar from Cash Flow Champs. Along with me, I have my partner, Paul Senior. Today, we are talking to Ryan Gibson. Ryan, thank you so much for your time today, sir. Ryan is President and Chief Investment Officer, and of course, co-founder of Spartan Investment Group. He has organized more than $200 million in private equity for Spartan's projects. Ryan has experience managing the development of SIG's projects in challenging markets. For SIG, Ryan is responsible for investor relations and capital raises for projects. Ryan is also a highly experienced commercial airline pilot. Wow, I didn't know that. Ryan graduated from Mercyhurst University with bachelor's degree in business, of course, with concentration in marketing, management, and advertising. I've known Ryan for some time. I met him a couple of times. Great personality, humble person. Ryan, thank you so much for your show. Thanks for your time today, sir.
Prashant, thanks for having me. Appreciate it.
Awesome. So Ryan, as we were discussing earlier, the purpose of this podcast is primarily to, motivate. There are a lot of busy professionals, right, in this world. A lot of technocrats, a lot of doctors, a lot of attorneys, small business owners. There are a lot of people who do not have time. I mean, they are busy in their grunt, they are doing what they are doing, marvelous things, but they don't have time to manage their money. Most people end up investing in stocks and a lot of them end up losing. I mean, some of them make money also, but their money in most times is not working for them. So we are in real estate and we, bring fundamental benefits, of real estate to these people and try to motivate them. Tell us a little bit more about what do you have to say to these people?
Well, I would say that you're making the first right step by listening to this podcast. I like to say that, I heard an interesting thing from The Rock, which was people have one day or day one mentality. So one day I'll get around to my investing and I'm too busy. And one day I want to learn about syndications, or one day I want to learn about replacing my active income with passive income. One day I'm going to listen to that webinar or pick up a book on syndications or how to make my money really work hard for me. One day I'm going to get that financial freedom to stop working 80 hours a week in a hospital and maybe reduce that to 40 hours a week, but have the same income, the same passive income. One day I'm going to think about that stuff. And I just congratulate everybody who's listening to this because they're making it day one instead of one day. They're making this day one. They're taking the first step to learning about how to replace active income with passive income. And, I was an airline pilot for a major airline for a number of years. I was an airline pilot actually for 17 years, working long hours, being on the road all the time, and thinking one day that I wanted to replace my hard-earned active income and truly become a passive investor that has the cash flow and flexibility to do the things that I truly enjoy doing. I have 2 children that I like to spend time with. I'm very excited and motivated to be fit and focus on hiking and myself and in my self-development. And passive income is the keys, is the vehicle to get to that ultimate destination. So, I think that for those that are thinking about, how do I take my profession that I'm good at, but really start getting the best out of the dollars that I earn, the most tax advantage, the most freedom, this is alternative investing is such a great way to do that. And, you just start it one day at a time. And so really excited to speak about it.
Awesome. So that is so awesome. Yeah. So, and that leads me into the next question here to Ryan. Thanks so much for being here. So Can you discuss like your expertise and just share maybe one tactic or maybe one tool that might benefit our listeners?
Yeah, so my expertise, primarily background in aviation, but then spent a lot of time listening to thousands and thousands of podcasts, reading books on Audible, but really my pivot and my focus today is I own about 600 million in self-storage. So I went the active investor route and built a business with my partner Scott, and we started a self-storage platform. And we help other people on their journey to invest passively with us on our self-storage syndications. And our self-storage syndications allow us to go out and buy value add mom and pop self-storage facilities. And we aggregate those facilities into a big portfolio. And as you probably have seen, like in the Wall Street Journal or other financial publications, there are huge institutional groups that come out and they don't want to buy onesie twosies, mom and pop operations like we do. They want to buy a whole portfolio. They don't want to buy one property in Chattanooga. They want to buy the 4 that we own in that area. So we go out, we aggregate these smaller facilities, and we add a tremendous amount of value to these properties by raising rents to market, by fixing up the properties, by doing the things that the mom and pops just quite frankly weren't doing, like advertising, call center, revenue management, ancillary revenue streams like through tenant insurance, et cetera. But our focus is in self-storage, and we help provide passive investors with opportunities within that.
That's awesome. That's awesome. And Ryan, there are so many different asset classes out there, and you chose self-storage. I mean, I'm pretty sure you probably did some research there and end up on that as an asset class. What inspired you to get into that asset class, and how did you get in?
What inspired us was, I'm an airline pilot. Scott's a military veteran, and we are in careers that where if we make a mistake, a lot of people suffer, right? Like we make a mistake on the battlefield or make a mistake in an airplane, a lot of people suffer. So we have this strong desire to be risk mitigated. And when you look back at the data over the last 25 years, self-storage has been recession resistant during the worst times in our economy. And the reason that is because people think, well, Americans just have too much stuff and they have self-storage. And there's some truth to that. But the real reason why self-storage has been recession resistant is because people use it during times of distress, when they're moving, downsizing, relocating, their job change, they're renovating their homes, they're growing their family, they're downsizing their family, or things like a COVID-19 pandemic where you have to free up a room for office space now at home, or you have to use now you can't work out your gym, so you have to clean out that garage now, right, and put a Peloton down there. So people use self-storage for life events, and what we found in our research in deciding storage is that self-storage during the last 4 major declines of GDP, self-storage occupancy, in most cases has actually increased or stayed tremendously strong. And if you look at the COVID-19 pandemic and you look at the self-storage performance across all other REITs, and I love multifamily. It's not a knock, I invest in multifamily passively, but self-storage outperformed every other asset class during COVID by a landslide. And that's because self-storage did really well during a global life event that put people on the road, and I'll just tell one more quick story. When I was an airline pilot, I actually was doing a trip in COVID, and it was right when the COVID-19 pandemic was setting in, and I was flying a 183 passenger plane down to Florida. There was one lady on the airplane, and I had to go up to her and say, "Hey, welcome aboard your private jet." Have you ever had a private jet before? Because there's literally nobody on the airplane. You can sit wherever you want. But no, I said, I got to ask, there's nobody in the terminal. Where are you going? What is so important? And it was kind of sad. She said, well, my mother just passed away and she's putting herself, and I got to go down there to put her stuff in self-storage. And so again, when everything was shut down, retail and malls and all the things were closed, self-storage really remained strong. And that was really the thing that attracted me to the space. The other thing that attracted Scott and I to the space was the fact that it's easy to own, easy to maintain, and easy to evict. We don't have eviction moratoriums like other asset classes. People, during the pandemic, people really cared about protecting people from losing their house, right? That's a good thing. We don't want people on the street. But as real estate investors, it's not always a good thing if you're holding that asset in your portfolio, because you can't collect income necessarily if that person pays, and the government is now restricting you from doing that. But nobody cares about grandma's dresser, right? Nobody cares about belongings in a self-storage unit. So we didn't undergo any of that moratorium or restrictions during the last recession. And we can invest in blue states or red states. It really doesn't matter. We don't have the tenant landlord laws that are plaguing a lot of our residential asset classes, in the United States today. So those are kind of the main reasons why we chose self-storage.
Ryan, that's a great answer. I want to take a step back. I know you were an airline pilot and you chose self-storage. I want to know about how was that journey? How did you decide, and how you transitioned from being an airline pilot into a self-storage person? And you're an icon now. A lot of people know you. I know you. I see you everywhere. So how did that leap of faith, from airline pilot quitting the job, how did that transition play out? If you don't mind sharing that.
Yeah, not at all. It started with a plan. I know, and it started with good people. It started with a good business partner. People say, "Well, how did you meet your business partner?" And he was my next door neighbor. So I don't know, pick a good neighborhood. But no, I met my business partner as my neighbor in DC. We were friends, and then we became business partners, and we laid out a plan. We laid out a strategy. We said, hey, we want to, provide investment opportunities for our investors, and we want to build a portfolio that has risk mitigation and a good strategy. So we actually built a strategic plan, and we rebuild our strategic plan every 3 years, and we share it with the world. We let it, we have full transparency into what it says. You can go to our website, spartan-investors.com. You can download our strategic plan, and you can see exactly what our plan is for the next 3 years and how we intend to get there. And so we laid out a plan, and we originally started in residential, but we changed asset classes for the reasons that I described earlier. But our journey started with the property right next door to our house. We bought a house, we flipped it. It was the house literally that shared, it was a row house in Washington, D.C. that shared the walls between my house and Scott's house. And it was the last kind of rundown blighted property on that block. We bought it, we fixed it up, we sold it for a profit, and then we were off to the races. And our original investments were in Washington, D.C., in building houses, building condos, flipping houses, et cetera. And we were just so hungry for information and knowledge, and when we decided to do self-storage, we just said, we're not going to run out and try to find a deal. We're going to run out and get educated. And most importantly, we wanted to get education for effective action. We actually wanted to go out and learn the things that we could apply straight away. So we spent a tremendous amount of time traveling the country, meeting with people that were in the space, going to the SSA, the Self-Storage Association conferences, the Inside Self-Storage conferences, and finding the heads of states in the space, and then saying, I want to take you out for a steak dinner, and I want to talk to you about self-storage, and just meeting speakers at conferences outside of the events, anything that we could do to really get that knowledge quickly, and get that folded into our strategic plan. And now, it's benefited us from education and action to get to where we are today. But I would just say, open-minded, open-hearted, have a plan, know that your plan's going to change, that your plan's going to fail, that you're going to have to redo the plan. A lot of trial and error, a lot of failure, kind of really mixed in there. Just being vulnerable to the changes that you have to make from yourself and inside your business. So.
Yeah, coming back to the point, you said a lot of changes do happen in your plan, and a lot of failures do happen. So I wanted to, we all talk about good things. I want to talk about what are the learnings from those failures? How have you applied them to your business? I mean, for our listeners, I hope that would be beneficial,
Yeah, I would say probably the biggest failure in the last 9 years is, when you're starting a company, when you think about doing a deal, right? If you're thinking about changing active income into passive income and you're just trying to be passive, this actually will still apply. But when you're also a real estate investor and you want to build a company, like I can tell you guys are really building something strong and, education and a conference and, investment opportunities, go for the best people early. Go for the experts early. And I mean, really stretch. I have people that are getting into like multifamily investing and they're looking for partners. And I'm pretty quick to tell them that you don't have the right partner, right? Because the partner that you have or the person that you want to attract has to be somebody with a deep amount of experience in the space. 10, 15 years working for a REIT, 10, 15 years working for a top brokerage. Find somebody or somebody for your team. It doesn't have to be a partner. It could be an employee or somebody who's incentivized through ownership that has a tremendous amount of skills and expertise. I think that the hard road that we took was learning it all as we went and growing a big platform with multiple different business lines without having somebody who had deep industry knowledge and experience right from the get-go. And it's difficult to do that, right? Because when you're first starting out, you may or may not have any cash, right? So how do you pay somebody a $500,000 salary or a president, right away, right? It's very, very hard to do that. But I would say that it's worth it. It's worth every penny to find a really good heads of state to really explode your platform. We went kind of a grittier way where we kind of brought in who we could at the time and kind of made use of resources. But if I could go back and just kind of strangle myself, say, go all in and just get the best person you can. And this applies to passive investing too, because what I would do is, you get into this space, right? And you're like, okay, there's syndications out there and I want to invest in a syndication. I want to invest in a private placement. I've heard all these podcasts about how guys invest, a minimum of 25, 50,000, 100,000, whatever it is. And they go find an operator and then they get some monthly income or some quarterly income and some upside and they get tax benefits and things like that. Go find like 50 operators, go hear, 10 pitches, whatever it is. Just know that, every year the SEC sends out how many offerings there are. There's 37,000 offerings a year, right? These syndications are everywhere. So get yourself educated and find the best operators that you can find. That's kind of my lessons learned over the years. I invested early in a syndication as a passive investor, and it turns into a Ponzi scheme. So my very first one, the guy ended up in jail. And it was because I had this mindset, like I just converted my Roth IRA to a self-directed, and I wanted to get that money going, right? And and so I was like, anybody who walked in the door next, I was going to invest with, right? And I just don't do that. I've learned a lot since investing 10 years ago in my first syndication, but just know that there's a lot of fish in the sea, and find the good ones.
That's awesome. I mean, that's super awesome. The advice, it's not about the growth. I mean, it's about not making a mistake. I mean, yes, you can grow 5%, 10%, but if you go down 15%, you're gonna nullify the growth that you have achieved. So these early lessons, early finding the right syndicator, obviously is a very, very important thing. I know you said negative. We talked about the worst experience. Tell us some good experiences also, if you don't mind. And did they come to you as a surprise? I mean, how has your journey looked like, in those good moments?
Yeah, I would say if you're looking for, again, passive investing opportunities or looking to kind of do this on your own, start with the mission, vision, values. I way underestimated that. That was something my business partner really pushed early on. We were sitting in my garage, my living room, wherever the heck we were, plotting our course. And, he really wanted to focus on mission, vision, values. And that to me, just feels like the gooey, business school stuff that they teach you that you don't really think matters. Right. And, it does. It matters a lot. You will be distracted with, I just want to go find deals. I just want to go find I want to go find opportunities, and I need to go to these, and you'll be distracted. And what you won't have is you won't have a mission, vision, values for the types of people you want in your life. That's your values. The types of people that you want working for your company, the types of people that you want to do business with, and your vision statement is going to provide clarity to anybody who works with you on what your vision is. And obviously your mission statement of, what you're setting out to be and the types of things that you want to surround yourself with. And I know it sounds gooey, the MVV, as we call it, mission, vision, values, but get out there and that's the first thing you should do. Because, I talked to so many different business leaders in Seattle and on my journeys in real estate. And they always come to me and they're like, how do you guys just hire and how do you attract people and how do you get how do you grow so fast? And I say, because I'm struggling, and I'm like, well, what are you struggling with? And like, well, I feel like everybody I hired is just not on the same page. And I always ask people, I say, well, what's your mission statement? And they kind of look at me like, well, it's kind of like, to do good things, and I'm like, you don't know your own mission statement. How can anybody that you hire or bring into your organization have any expectation for what you're trying to do? I mean, as soon as they walk in the door, they're misaligned because they have no idea, and you don't know, right? So I think that has been very foundationally strong to success. And I can't stress that enough.
That's awesome. That's awesome. When you have that vision mission statement, it's almost like, it's like a lamppost that everybody can see, keep alignment. And so everybody can work cohesively to a given goal that is very clear. And we're as a team, we're reading the Rockefeller Habits right now. And we do the one-page strategic plan there too. And that's a powerful thing. When the cohesiveness is there and the same synergy is there and people are cohesive in terms of what needs to happen next, it makes a big difference. I love
the Rockefeller habits, by the way. It's really fun to have your team do them all separately.
Yeah.
And then see how far off you are on where you think you are. That's kind of fun. Anyway.
Right. But,
yeah.
I can see why people ask you about your tremendous growth, because, just from hearing you speak, the amount that you guys have accomplished in so short a period of time, I'm pretty sure there comes a point when you had to make a decision in terms of who the first employee is going to be, who the second is going to be. It looked like some decision has had to go in there. Can you talk us a little bit through how that growth, especially in the first couple of hires, kind of take place, and what type of thinking kind of go into that so that you can launch the company off to where it is today?
There's always this debate about what comes first, the deal or the money, right? The deal, the money, the deal, the money, the deal, the money. Oh, if you get a good deal, all the money will come. Or if you don't have money, you can't get a deal, right? I'm going to end that debate from my personal experience right now. It's all about money. And here's why. Here's how I can prove, hopefully, to everybody and the listeners that this is true. If you found a $2 billion deal that you would do right now, would you have the cash to do it? And if the answer is yes, good for you. If the answer is no, then you probably need to get to work on building a bigger pipeline, right? And I always hear like, oh, I got more money than deals. You don't. You're just doing small deals, or you're not really building that big of a portfolio, right? And so having said that, I think what you really need to focus on is laying out your strategy for how you're going to position yourself, right? And so, when you have hires that are going to contribute to you collecting, investors attracting money, getting bank loans. All those things are money, right? Debt, equity, right? You have to get these things. If your books aren't straight, if your accounting isn't solid, if you can't produce tax returns, if you can't produce K1s timely to your investors, guess what's not going to happen? You're not going to get money. So our very first hire was an accountant, a property accountant. Now they started off as office manager, right? And kind of doing a little bit of everything, but with a strong bookkeeping background. So we also started with kind of 3 founders, really 5 people that started the company. And, in that we had finance, we had strategy, and we had capital raising ability. So those 3 things I think are critical to the very early on. How are you going to bring in your money and raise your cash? How are you going to do your bookkeeping and accounting? And what's your strategy? Because strategy will help you raise money. When we first started, we had no experience in real estate, absolutely 0 experience. We had 0 experience in self-storage. We're now the 40th largest operator of self-storage in the United States, right? And we only started in self-storage in like 2017, 2018 really is when we bought our first property. So it's not that long past surpassing, a lot of the other operators. And it was because we had strategy. Investors looked at us and said, these guys have a plan. Even though they don't have AUM or assets under management, they have a plan to get to where they're going. And when we went to go get bank loans, the banks would tell us, you guys are the most buttoned up loan applicant we've ever seen. Your ask is clear, your finances are clear, you've got a good kind of pitch booklet. You guys are clear and concise on what your business plan is going to be for this self-storage facility. So we could get the equity and the debt because of those things. So I would say when anybody who's trying to start a business or raise capital, those things have to be airtight, locked in lockstep.
That's awesome. That's awesome, man. You're dropping some nuggets for our listeners. We really appreciate that. That's good stuff. We're going to kind of, you appreciate your time. We're going to kind of jump into what we call our lightning round now, and just 3 simple questions we normally ask our guests. And the first one is, give us one piece of advice that impacts your life and how you think it may benefit others.
Yeah, I would say find a group, continue to evolve and find your peer group. So when you first start off in real estate, your peer group might be a local RIA of like-minded investors. And then you might realize that you're kind of not the smartest guy in the room, but as soon as you feel that way, you need to get out of there. You need to
get out of there, huh?
Yeah, get out and go and stretch. I want to be, I recently joined YPO, and YPO is an organization that really pushes me because it teaches you leadership. It puts you in a room with people that are way more successful than you are. And it pushes you. It pushes you to be a better leader. It pushes you to be stronger. So get a stretch business partner. Get somebody who's done way more than you have and has way more experience. Constantly be evolving friendships and business relationships to be people that have done way more than you have. And I think just having that vulnerability and that ego check is really important and impactful to growing as an individual and an investor.
Awesome. Can you share one of your personal habits that contributes to your success that you think may benefit our audience?
I meet with my team every day for at least 15 minutes. So we do kind of a combination, Rockefeller habits, traction. We do what's called a WIG, wildly important goal. So I get my sales team on Mondays, and now our leaders are kind of running these meetings. But every Monday I get the sales team on. It's just a 15-minute check-in. We go around the room and we say, "What's your wildly important goal for the week?" And the wildly important goal for the week is the thing that does not get set to the side, right? It's the thing that you are going to accomplish this week that's going to move the needle for you the most in your respective department. And so we just go around the room and we say, "My WIG for the week is to do this." And everybody writes it down. And then next Monday, it's, did you accomplish it? What is it for this week? And so I say that, having some regular routines on check-ins and holding yourself accountable in groups is really, really powerful.
That's awesome. And can you elaborate on that a little bit? Because of course people come with their wig and, some people accomplish it, some don't. Some people are repeatedly not accomplishing it. I mean, how do you handle that when you have a department or somebody in particular not really doing what they ought to do in terms of getting them in alignment to the company's vision?
Well, you also ask in that meeting, what is the thing that you're struggling with? Okay. So, that wig might be that person's wildly important goal that they need help, right? So you want to make sure that they are also offering what they're struggling with. If my important goal is to get a webinar or PowerPoint out the door and I'm relying on somebody in that meeting, I might say, and I really need your help, John, getting that presentation done because I need your input on this slide, right? And that might be the thing that's holding them up. But even beyond that, even if they're still not accomplishing, I always say the front windshield is much larger than the rear view mirror, right? Keep focusing on the future. Keep focusing on what you have to do this week. Maybe you screwed it up and your wig didn't get accomplished. And as a leader in the department, I might say, how can I help my team clear the obstacles so they can be accomplishing the thing that they're holding the most important thing. So I'll give you a great example. We're touching base with all of our investors right now because we're getting ready for our fund launch. And one of our teammates had a goal to contact 12 people a day. And but they just weren't getting to it because the admin work was getting in the way or they were getting distracted. So I said, hey, calls during the day, admin work at night, right? Just help that person kind of structure their day. And that can be highly effective when you have clarity of vision for what they're trying to accomplish. And so you might say, hey, do you mind if I suggest something to help you accomplish your wig? Let them receive that openness and then give them some tools to actually help them be more successful. So.
Awesome. So I'll ask this last question and turn over to Prashant to know he has somewhere to go. Just, we're working with passive investors, people who are busy professionals who need the help in terms of direction, in terms of how can I invest passively and have this passive income coming in while I keep my permanent 9-to-5 job. Is there a book or any type of resource, Ryan, that you would recommend for these people to at least start reading, start getting their mind familiarized in terms of passive income, passive wealth?
Yeah, I mean, we actually did an ebook on how to evaluate a sponsor, and that's available at our website, and you can download that. And I think it kind of speaks to the sea of people that you'll meet, and just kind of like, what's a sponsor versus a KP versus an operator versus what's a preferred return? What does this mean? What does that mean? And how do I? That's great, Ryan. You want me to go find a bunch of operators, but how do I even find operators? What website can I go on to see everybody who's filed the Regulation D offering? The book covers that kind of stuff. We put it together. It's on our website. We're also putting out another book, I believe, in the coming weeks on the basics of a syndication. We're actually going to kind of go through what a waterfall is, and we're going to give examples and things like that. So I would say that's a pretty good resource. Just from my years of investing with, over a dozen operators and doing passive investments. And, there's some other great books out there, but, there's a lot of really good content via webinars, podcasts, things like that, stuff that you guys are doing. Going to conferences. I love the Best Ever Real Estate Conference that's now in Park City this year, beginning of March. Just a ton of great speakers and operators and passive investors alike kind of show up to that. So I really like that as well.
So Ryan, we talked for about 30 minutes, and we said that we were going to record for 30 minutes. My question to you: what is it for you for future? I know we earlier talked. We have funds coming up and stuff like that. So this is your time, sir, for you to pitch. What is it for you for future, and how can our listeners reach out to you?
Yeah, so we're launching 3 funds in 2023. They open March 1st of 2023, so I don't know when this is airing. And investors that invest in the first 45 days of the fund launch actually get a better return, better split. And we're focused on storage. So last year we did the income fund, monthly distributions, per return, existing properties, great for cash flow, great for replacing active income with passive income. That's the Spartan Storage Income Fund, and that's all going to buy self-storage. And then for those investors who are like, yeah, that's great. Coupon clipping is good. Getting that distribution is nice, but I want to swing for the fences. I want a little bit more upside. We have the growth fund. And so we actually build self-storages from the ground up, and that's got a targeted higher return potential. And for those investors who don't want any risk or any upside, we actually have a debt fund that pays either 8% or 9% per annum returns, depending on your redemption option. And all those launch on March 1st. We have a ton of education already posted about exactly how the splits work and exactly what the details are. And if you go to our website, spartan-investors.com, you can get on our wait list for those funds. And then you can go to our offerings page, and all the videos and everything is on there to give you kind of a quick rundown of the different funds.
And how can anybody, if anybody wants to reach out to you, how can they connect with you?
Yeah, good email is Ryan, RYAN, at spartan-investors.com. And then I'm also on LinkedIn. So you can connect with me on LinkedIn, and would be great to start a conversation.
Once again, Ryan, great conversation. A lot of knowledge nuggets that you have given to our listeners of this Cash Flow Champs podcast. This is a new podcast, but we marketed it a lot. Hopefully it gives a lot of visibility to you and some to us as well. Once again, thank you so much for your time, sir.
Appreciate it. Thank you, guys.
Thanks, Ryan. Really appreciate you coming today.
Yeah, no problem, Paul. Good seeing you.
Thank you for tuning in to this week's episode of the Cash Flow Champs podcast. Cash Flow Champs partners with busy working professionals and entrepreneurs that want to build and maintain generational wealth through real estate. Visit cashflowchamps.com to learn more about us